Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, you usually introduce potential new exploration discovery plays to Discovery Watch. We've also featured old discoveries that are undergoing a form of rediscovery, such as Clean Tech's nickel cobalt Syerston project in Australia. During the past week, a junior that you covered intensely the last 8 years awoke from a 2-year slumber. You published a comment to your subscribers this week about a new discovery, Verde Agritech, that was made with regard to its Cerrado Verde project in Brazil. What is new about this old discovery?
Well, the Cerrado Verde story is a very interesting story that I've covered pretty intensely since 2008. In 2008, a Brazilian junior went public on the venture exchange with various gold and base metal projects in Brazil, raised a lot of money, got caught in the crash of 2008, ended up trading below its cash breakup value. Now, the CEO of the company, Chris Veloso, has deep roots in Brazil's agricultural sector, and he was aware of an 80-kilometer belt of potassium silicate rocks, technically called glauconite, in the state of Minas Gerais that had been found or I'd recognized during the 70s, late 70s, early 80s, and studied by various groups, including government organizations, as a potential source of potash. Now, Brazil is one of the world's biggest agricultural powerhouses, and it has the most unused arable land of all countries in the world. However, it imports 90% of its potassium requirements in the form of potassium chloride, the potash produced by Canada, Russia, Belarus, and then to a lesser degree Germany and Israel. But the work done by the government agencies in the early 80s concluded that when potash was $100 a ton or so, this stuff could never really be a source of potassium for the farming industry. However, in 2008, potash ramped up to almost $1,000 per ton as all part of this new China boom, this super cycle. Everybody expected that we have a new reality with regard to potash prices. And so what Chris Veloso said, this old potassium silicate deposit could possibly work in this new reality of higher potash prices. And so his company, at the time called Amazon and then renamed to Verde Potash and now renamed to Verde Agritech, staked the entire belt of rocks, initiated exploration, outlined billions of tons of 7% to 12% K2O, which is the basic form that potassium occurs, and then revisited the technology that the government had come up with, whereby this rock was calcined in a rotary kiln and ground up and heated in order to alter the chemistry to make the potassium silicate less insoluble. It still doesn't make it soluble like potassium chloride, which is a salt, and you add water to that and it easily goes into solution and becomes very available to plants for uptake. And that's actually a big problem in Brazil because the soils are very acidic and they have an awful lot of rainfall, and so the potassium chloride that they apply to the fields, a lot of it just disappears as rainfall-driven runoff, and so the poor Brazilian farmers have to apply a lot more potash to their fields than in other bread baskets of the world. Now, what was interesting about this thermal potash product was that it functioned as a type of slow-release source of potassium. So they were initially wanted to market it as a supplement for the farm industry, where you would still apply potassium chloride, but you would also apply this whole rock product to which limestone had been added, so it also functioned as a soil conditioning force for the acidic soils of the Cerrado, the savannas where all this stuff is grown in Brazil, and they wanted to market this product, but they had to do all these agronomic studies to prove that this actually worked, and this was dragging on, and there was pressure to develop a potassium chloride resource. So they teamed up with a professor at Cambridge in the UK called Derek Frey to come up with a flow sheet to convert this potassium silicate into potassium chloride. And they actually succeeded in coming up with a flow sheet and delivered a PEA in 2012 to produce an awful lot of potassium chloride. And this opened up the possibility that this Cerrado Verde deposit could become a meaningful source of potassium for Brazil, whose dependency on imports is one of its farm sector's vulnerability. They went on to do a definitive feasibility study that was supposed to be bankable. However, when they finished that, the equipment providers refused to provide a performance guarantee, and it was not bankable. And by then, potash had dropped to $300 a ton, and they needed $400 a ton. Today, it's about $200 a ton. So the potassium chloride story was dead. So this story really is a cat came back. This company seems to be dead, but it comes back to life again. So then they revisited the thermal potash approach and came up with a 700 ton per day plan to produce thermal potash as a supplement and as also a complete solution for products which need to be classified as organic, like certain coffees. If you want to have organic coffee, you can't use potassium chloride because that by definition is an inorganic product because of the intensive processing that it has undergone. So they've been doing successful studies with that. They completed a pre-feasibility study for it in 2014. In 2015, they submitted a mining permit. They had a $100 million guarantee from a credit agency in Brazil for the CapEx funding. And then, of course, Brazil's Petrobras scandal descended upon the country. Everything slowed down. Very little has been improved or approved by the permitting system. And the company is still waiting for the environmental license for the thermal potash scenario. But in the meantime, they were revisiting the control studies they had done where they had simply ground up this Verdeci slate, this greenish material, and spread it on other farm plots to see what happens, to see if the thermal potash processed version is indeed better than just using the ordinary stuff. And they were surprised to discover that while not as good, there was a meaningful release of potassium from the potassium silicate simply from being ground up at less than 0.7 millimeters. And then they came across new work being done by a group of Indian soil scientists who are arguing that why should farmers be dependent on this potassium chloride produced from a handful of countries in the world, costs a lot, has to be applied, when there are natural minerals in the soil which are attacked by a certain class of microorganisms which release the potassium that's in minerals like feldspar and mica and so on. So there's a huge movement afoot to actually cultivate microorganisms in farm soils as a way of liberating naturally present potassium in little tiny grains of sand and stuff like that that's already there. Now, in Brazil, the Cerrado savanna is not that well endowed with these potassium endowed or containing minerals. And so when they applied this potassium silicate and the microorganisms attacked that, there was a meaningful release. So the rediscovery that the company has made is that these billions of tons could simply be ground up fine and spread on the fields, and this would definitely be a supplement. It does not deliver the instant payload that potassium chloride does, but it becomes a long-term source. You do not have to do as many applications. And so what was initially a very complicated flow sheet to produce a product, they've come up with a simple one where literally they just quarry the stuff, grind it up, package it, and they also are looking at selling it to the consumer markets, shipping it to the United States as a cat litter. And I have tested some samples they sent to me with my cats, and you can literally take this stuff and put it in your compost if you've got a proper compost that heats it up well enough. So it's a way of instead of putting your cat cat droppings into the garbage can, along with your super scoop cat litter that's all been chemically altered and prepared. You could use this natural product. So there's a potential big market for that. But what they did is they applied for a smaller scale mining license, up to 200,000 tons per year, though their initial version was 20,000, so they could test this. And the big news that made the stock pop in the past week was that this environmental license was granted. Now they get to proceed for a mining license, and this takes only a few months because it's a different group of regulators who look at it. They're mainly concerned that the mining plan actually has been competently designed, so the main environmental objection has been overcome. And this is in a different location than their thermal potash application, which is for 225,000 tons a year. And if they get that one, which is backed by a full environmental impact assessment, then that could eventually be scaled to like 20 million tons. So they may finally be in a position to exploit this resource that they've been focused on since 2008. And the new discovery is that microorganisms are a big force, going to be a big force in the future of the agricultural sector.
Speaking of mining permits, how are things going with our Scandium Juniors, Scandium International, and Clean Tech Holdings?
Well, just to provide some background there, Scandium International received its development consent last October from the Environmental Board in New South Wales and submitted its mining license application. They had been optimistic that they might get it before Christmas, and then they were optimistic, we'll get it in the second half of January, when the Australians go back to work. They didn't get it before Christmas, obviously too optimistic. They have not received it yet, and the most likely explanation is that on January 18th, the Premier of New South Wales decided to resign for family reasons. And of course, what happens is when you have the leader of state or province, suddenly is gone, the bureaucrats use that as an excuse to slow down everything while they see which way the wind is going to blow. And so the CEO of Scandium International was in Australia during the past few weeks, making sure that no issues have cropped up. From what I can tell, he did not really have to do anything. Everything is still proceeding through the bureaucratic process. So they could get it tomorrow. It could be 2 weeks. It could be 4 weeks. It's in the hands of the government bureaucrats, and one simply has to be patient. In the case of Cleantech and its Syerston project, in their publications that they had made, they had indicated that they had submitted a modification to the development consent that had been originally granted in 2001, which had already had a modification in 2006, and that was all for the large-scale nickel cobalt application or mining plan. And that, of course, died on the vine because nickel and cobalt prices were pretty weak, and this project, the grades could not support the economics, the costs of producing it. But what they then did is they discovered a rich scandium component in that deposit, on the edges of the deposit, and they submitted a development application, consent modification, to include a smaller scale scandium-only plant. And I was talking about this in public, and I ended up getting communications from company management saying that that it's not correct, that we are waiting for a modification to development consent for a standalone, 250-ton a year plant. We have simply applied for the right to include scandium as a byproduct. And so this is a significant change for Cleantech in its strategy. It has shifted its focus from trying to be the first producer of scandium as a primary supplier to ramping up the nickel cobalt scenario, which is a 7,000-ton a day operating plan, It would produce nickel and cobalt sulfate aimed for the battery market. And of course, battery demand is growing. We even hear now that Tesla isn't just making lithium batteries for cars. It's also building giant battery banks for all the solar and wind installations in the United States, so that the intermittency problem can be dealt with by storing the electricity while the sun is shining and the wind is blowing, and then draw it down when that isn't happening, and thereby even out the unevenness of sort of renewable energy supply. So this is a big deal for Scandium International and its Ningen project. Cleantech has in essence given up trying to get approval for the standalone operation. They are going full throttle for the nickel cobalt. If they can get this going, they believe they'll have their definitive feasibility study done by the end of this year. It's a $700 million U.S. capex project. It's quite ambitious, and the cobalt price is helping out. When they started this, it was only $12 a pound. It's now at $18 a pound. At Indaba, Robert Friedland gave a presentation on behalf of Cleantech where he pointed out the world's vulnerability on cobalt supply from the DRC. Half of it comes from the DRC. Kabila is not stepping down as he is supposed to. The country has potential for civil unrest and disruption of supply. So having a cobalt supply from a place like Australia is very important for the whole future lithium battery industry, because cobalt is a key component of the cathode. And so what used to be a competition between Cleantech and Scandium International, namely who would be first and what would be the price, in essence they are now not really in competition anymore, because the Syerston nickel cobalt project could produce 100 tons of scandium as a byproduct, more if they can successfully blend the higher grade material from the edges of the deposit. And that would not kick in until after 2020. If Ningen gets its mining lease in the next couple months, it could be in production by 2019. Presumably they can get some offtake agreements from users that it's not critical that they get scandium. For the big guys like the aerospace and automotive industry who need certainty that they will get the supply, this will actually work out to Cleantech's benefit, because if Scandium International can demonstrate that yes, primary scandium supply is a reality, and they can of course scale it up bigger too, then if the nickel cobalt operation kicks in with a meaningful supply of scandium, that of course will substantially enhance the economics of the Syerston nickel cobalt mining plan, and it will give a major second source of supply to all these end users who would love an aluminum scandium alloy.
Discovery Watch with John Kaiser will be right back after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with John Kaiser. John, last week you introduced Discovery Watch to the Risti Gold project of Orion Resources in Finland, where Mike Bash has discovered an area of outcropping quartz veins with high-grade gold. A big question for Orion investors will be what happens beneath the surface. I understand something similar happened more than 100 years ago outside the town of Kenora in Western Ontario. What is it about Canstar Resources and its Kenora project that's caught your attention?
Well, Canstar Resources is a sort of an old company cobbled together from several other companies around 2000, 2002, and it has spent the last sort of decade spinning its wheel, fighting litigation in Newfoundland on the Mary March copper zinc project, a VMS system that Phelps Dodge had optioned from what was then Falconbridge and now is Glencore. And this project ended up getting caught in the map staking that Newfoundland introduced in the wake of the Voisey's Bay discovery. And they ended up in a dispute with Al Chislett, who was Chris Verbisky's partner, the two prospectors who found the Voisey's Bay deposit. And this dragged on until 2012. Canstar finally got a verdict in its favor, went in there and drilled it, and after all that struggle, the results weren't quite what the market wanted. And so Harry Hodge, who had been sort of the primary backer of the company, had also been the primary backer of Probe Mines, for which he brought in David Palmer, and they've discovered the Borden project, and that was taken over by Goldcorp for $500 million worth of stock in early 2015. The company survives as Probe Metals, which is one of our Discovery Watch juniors. But Harry was tired, and he said, we need to get somebody else into Canstar. And so Dave brought in Dan Oosterman, who is basically sort of a career exploration geologist. His last major stint had been with Wellgreen Platinum, drilling off the nickel cobalt platinum project in southern Yukon, running that program. So they brought him in 2012-13, and he had done some homework in this Kenora area, and in the late 1800s, close to the turn of the century, prospectors had found outcropping high-grade quartz veins, sort of similar to what Orion has in the Risti project, and everybody got very excited. There were like 20 shafts pounded down on it. The ownership was fragmented. There were all these tiny little claims on all these quartz, gold-bearing quartz outcrops. So they mined these things out, sort of maximum 80 feet, sort of 30 meters type. Then it petered out. It all looked kind of like sketchy, erratic veins. By the 30s, like Red Lake, about 150 kilometers to the north, had been discovered. That was a true mesothermal, orogenic gold system, mother lode type of system with big grades, goes very deep, and all that stuff. So the Kenora district, and this was just right outside the town of Kenora, it sort of faded from view, and everybody forgot about it. And during the 80s, after gold jumped to $800 and settled back to $400, there was some rush in the area. Groups said, well, let's try and use geophysics to see deeper down. Maybe we can see something here, because obviously at surface there's nothing for us to follow anymore. We scratched out the high-grade gold that we could find, but the geophysical surveys at the time didn't really reveal anything interesting. So what Dan Oosterman did on behalf of Canstar was assemble what land that he could, and one of them is the so-called Aviator property. He's got several properties in this area, and they have found the Ace showing, which was an outcrop that still had some gold in it. And they have just completed a 7-hole drill program, just over 1,000 meters, and interestingly, none of this area has ever been drilled. It was all just done with pick and shovel type of chase the visible gold that you could see at surface, and just follow it, underground until it peters out. And he thinks that this mineralization is controlled by stress fractures, shears that surround an igneous intrusion in that area, and that the mineralization is related to that intrusion. So this is different from, the typical Timmins, Kirkland Lake, Abitibi Greenstone type of systems. This is one where the gold was a more traditional hydrothermal system, And he thinks that by properly drilling the contact margin of this mineralized system, they could possibly put together zones of mineralization that would be a complete rethink. Whereas in the past, they had the miners had simply chased skinny veins, and the grades were spectacular. They were up to like 10 ounces per ton type of thing. But he thinks we don't need 10 ounces per ton, but if we can put together 5 to 10 gram zones of 5 meters or so and show that there's some coherency here, we may have a new discovery right outside the town of Kenora. So they are now awaiting assays. They, of course, for the first time doing geological logging of the core and figuring out where's the mineralization. They do see visible gold in this type of stuff, and there is a correlation with sulfide, so that's a clue that it's related all to the hydrothermal type of system. And they hope to have all the assays back before PDAC, which is of course where everybody starts their stuff. PDAC runs from March 5th to 8th. It's the biggest mining conference in the world. And so Canstar and its Kenora project is a new Discovery Watch Junior that people should be watching to see if an old discovery depleted by the miners actually has a new life as a fresh discovery.
John, thank you so much for the update.
Thank you, Jim. You're welcome.
Discovery Watch with John Kaiser will be back next week. His website, KaiserResearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.